Hey guys, thanks for coming back to our channel. I know there's a lot of people here that come to our channel who are new to Canada and may or may not know about RRSPs. I know we get a lot of questions about income taxes and how to file them, which will come in a later video. But a way that you can reduce the amount of money that you have to pay the government in your income taxes, which happen every year, is to contribute to an RRSP. Now, you might be saying to yourself, what is an RRSP? An RRSP is a registered retirement savings plan. The idea is that you are putting money into this special account, which will be used for you in your retirement when you are not working anymore. So let's say you retire at age 65, you would then start withdrawing the money from this account at age 65 as your income because you're no longer working. There are several types of RRSPs that I've mentioned here on the side. So the first type of an RRSP is an individual RRSP. So this is one where it's specifically for you and it's going to be managed by a company or another individual. The second type is a spousal RRSP. So this is one that you would set up for your spouse, so your husband or your wife as an example, and you would then be putting in money into that RRSP for them, which they would then have access to. The third one is a group RRSP. This is generally offered to employees by a company where they have a large group of all the employees put money into it. It's usually managed by another company. They'll probably do like a price match or a contribution match rather, where they say, okay, as an employee, if you put in 2% of the RRSP, we'll put in 2% for you. So you essentially get 4%. And then the last one is a self-directed RRSP. So this is basically where you are determining where your money goes to. So you are specifically saying, oh, I want to have these stocks or shares in this company, etc., or in these funds or whatever. So you are directing where the money goes. So what are some of the benefits of an RRSP? Well, the main benefit is that you're going to reduce your taxable income right now. Every year we have to do taxes, and the government says, hey, well, you made $80,000 this year. We're going to tax you on that, both the federal and the provincial government, and they will charge you at a certain rate or a certain percentage of your income. If you put into RRSPs, any money that you put into the RRSP will immediately become tax-free at both the federal and the provincial. So if you put in $10,000 into RRSPs, that's $10,000 where you are paying no tax. The second point mentions all money invested is tax-free until withdrawn. So the trade-off is I have now put in $10,000 into RRSPs. I didn't pay any tax this year, so likely what will happen is when you file your income taxes, you will get a tax refund, assuming you've paid taxes throughout the year and you're not owing the government a bunch of taxes. And then when you go to use that money, whenever you choose to withdraw it, which is usually your retirement, you will then pay taxes on it. Now, you can withdraw your RRSPs before your retirement age. If you take this money before you retire, you likely have a salary or money coming in because you're working. So you're going to be taxed at a higher level, right? Because now you're getting extra money on top of what you're already making. So let's say you're making 80,000 and then your RRSPs are 10,000. You're getting that extra 10,000 on top. So then this year when you'd be withdrawing it, be like you have a total income of 90,000, which then increases the amount you're being taxed on. So what else can you do with RRSPs? Well, you can actually use 35,000 of it to buy a home. It's called the Home Buyer's Plan, and what they do is they allow you to borrow money out of your RRSPs up to 35,000 and use that as a down payment to help finance your home. You still have to pay that money back, but you have 15 years to do so. And lastly, an RRSP provides future savings for retirement, which is the intended outcome. So how much can I put into RRSPs? Well, the yearly limit for an RRSP is 18% of your gross salary, up to a maximum of $31,560. This is subject to change yearly. It has steadily kind of been increasing. So taking the example of somebody who's made 80,000, they would have $14,400 as an RRSP contribution limit. That would mean they could contribute from the amount that they made this year, that much amount of money into RRSPs. I'm going to make a note here that if you're receiving dividends, any portion of your income that is dividends is not eligible to be counted into this RRSP contribution limit. This affects self-employed individuals who may be receiving dividends, or if you're invested into stocks and you're receiving a dividend, you cannot count that. Now, every year when you file your taxes, you will receive a notice of assessment. It will actually tell you what your unused RRSP contribution limit is. Here I provided an example on the screen. Well, it's actually quite blurry, but on the bottom, it's actually the last line. It will say available RRSP limit, current limit. It's the last line on that second page, and it will show you a number. So that will tell you based on what you had happen last year. So let's say you made another 80,000 last year and you have basically 14,000 available and you didn't put any in, and then you made 80,000 again this year, you would have almost $29,000 that you could use and you could deposit RRSPs into. That would be your limit, your contribution limit. Now, this doesn't go away. If you didn't do any RRSPs for 10 years, your contribution limit would stay there. So you can do it at any later point in time that you wish. So you're probably asking yourself, well, how can I open an RRSP account? Generally, any bank, credit union, and even insurance companies allow you to do that. You can pretty well just go into Google and type in RRSP account, and you can find lots of sources. I just took a quick snapshot of a bunch of banks that do that. I know there's insurance company like Sun Life that does that. There's a whole pile of them. So when is the RRSP contribution cutoff? Any contributions made before March 2nd of the current year will be reflected onto the current tax year. So taking some examples here, any money that you put into RRSPs from March 2nd, 2023 to March 1st, 2024 will be deducted from your 2023 income tax. The reason it is not deducted from your 2024 income tax is because the government has said if you put in any money before or on March 1st, it will reflect on the previous year's taxes. So in this example, we are in the year 2024, and you have until March 1st, 2024, put in money into an RSP account. That money becomes tax deductible, so you'll get a tax refund on your taxes for the previous year, which is 2023. In the other example below, any money put into your RRSPs from March 2nd, 2024 will be deducted from your 2024 income taxes. So it would not show up in the current year's income taxes because you've missed the cutoff. So how do you know how much RRSPs you've already put in this year? Every institution is required to send you an RRSP contribution slip every year. They're going to send you one from March to December and January to February. Usually these slips will arrive in March of the current years. So if you are banking, let's say, with TD Bank and they have your RRSPs counts with them, they are responsible to let you know, hey, your slips are ready, you can download them here, or they'll send them in the mail or whatever. And if you've contributed to your RRSPs during last year from March 2nd to December, you will get one slip for that. And then if you've contributed from January 1st to March 1st of the current year, you'll get one slip for that as well. These you'll keep, and then you'll input them into your tax return that you'll be filing in March and April timeframes of the current year for the previous year's taxes. Once you file your tax return, the government will assess you and then say, yes, they agree with the amount of the refund shown, and then they will send you a check for the amount of money you are expected in your refund. At that point, you can go and buy yourself a big ass screen TV or a new car or a gift for your wife or a bunch of drugs. Okay, maybe not the last one. Here I want to show you guys some examples of RRSPs and how much you can save. So the first one is an example of somebody in British Columbia making $50,000 a year. We're showing here that they've contributed $5,000 to their RRSPs. And then the last line there is income taxes paid. So I just put in the value of what they would pay normally in income taxes on $50,000. This is using a calculator that I went online and grabbed. So you can just Google search any income tax calculator you would like and do the same thing for your salary and your RRSP contributions and get an idea what you will be saving. So in this case, $50,000 a year, they paid all their taxes already through the year, that on $5,000 RRSP contributions, they've saved $1,106. So they will be getting that in a tax refund from the government this year. In this next example, we have somebody living in Alberta making $80,000 a year. They have paid all their income taxes for the year, which is over $15,000, but they also contributed a maximum value, $14,400, and that has saved them $4,392. And then in this final example, we have somebody in Ontario who's making an income of $225,000, has paid all their taxes, which is over $78,000, and they've now contributed $20,000 RSP contribution limit. You can see here on $20,000, they have actually saved almost 10 grand. They've saved $9,725. That's almost 50%. And you might be saying to yourself, why is that the case? And it all comes down to the tax rate. So you can see here on the very bottom line on the right, the marginal tax rate for somebody making $225,000 is almost 48%. So that means for any money that they get that is tax-free or tax-deductible, like an RRSP, when they claim that, they are getting back almost 48% of the money that they're claiming. The more money you make, the more money that you have to pay in taxes at a higher rate. If we go back to the previous example of somebody making $80,000 in Alberta, you can see here their marginal tax rate is 30% or 30.5%. So that's why they're getting back about 1/3 of the money that they're putting in. And then going back, previous example of somebody making $50,000 in British Columbia, their marginal tax rate is 20%. So, which is why they're getting back just over $1,000. Well, I hope you found this helpful. I will be making another video later regarding how to do your taxes, or at least how to do your taxes on a basic level. Hopefully that will be helpful. There's a lot of software programs out there that will essentially guide you through the process. So that's what we will be doing together. All right. Thank you all for watching. Have a great day. We'll see you again next time.